Welcome to the Stock Market Daily News Podcast. Today is March 4th, 2026, and we're here to break down yesterday's wild market moves from March 3rd. The S&P 500 finished flat, the Dow Jones edged lower, and the Nasdaq managed a slight gain despite big global turmoil. The big story? Asian and European markets plunged as the US-led conflict with Iran stoked fears over energy prices and supply disruptions. We'll unpack those dramatic moves, dig into sector shakeups, and see what's next for investors as global volatility takes center stage. Let's get started. Our first story: Asian markets took a sharp hit as geopolitical conflict escalated. South Korea's KOSPI index plunged over 6.5%, its worst day this year, while Japan's Nikkei dropped more than 3% and the Australian ASX lost 1.5%. The sell-off was driven by worries that the Iran war could cut off the Strait of Hormuz, the world's most important oil shipping route. Airlines led the losses. Korean Air closed down 9% and Japan Airlines lost about 6% as thousands of flights were canceled. Investors should note, supply chain risks and higher energy costs could keep pressure on Asian shares in the days ahead. Stateside, U.S. stock futures pointed lower Tuesday morning as Wall Street grew more concerned about the crisis fallout. On Monday, the S&P 500 held flat and the Nasdaq ticked up just over 0.33%, but weakness in airline stocks was clear. United, Delta, and American Airlines each dropped 3% in pre-market trading, reflecting concerns over spiking jet fuel prices and disrupted travel. Oil caught fire, with West Texas Intermediate up nearly $4.50 to $74.50, and Brent crude up almost $5 to $81. For investors, energy price trends will be a key market driver in the near term. Shifting to India, tensions rattled the Wall Street as broad uncertainty dragged down most sectors. The Nifty Tourism Index fell over 3%, and leading airlines like Indigo and SpiceJet both tumbled 6%. Specialty chemical firms also lost ground, with Gujarat Fluorochemicals off almost 5%. In contrast, pharma and metals stocks proved resilient, driven by their defensive qualities and exposure to commodity cycles. The big takeaway: expect increased sector rotation as markets price in higher shipping and input costs, especially for countries reliant on Middle East energy routes. Turning to crypto, Bitcoin faced a sharp sell-off, dropping more than 3.5% to below $67,000 as investors flocked to the US dollar on inflation worries. Shipping disruptions and spiking oil prices fueled concerns that higher fuel costs could reignite central bank rate hikes. Despite the slide, U.S. spot Bitcoin ETFs saw heavy inflows, over $458 million on Monday, signaling that institutional investors view price dips as buying opportunities. Volatility is likely to remain high, but strong ETF inflows may support long-term sentiment. Finally, let's spotlight one corporate headline. Morgan Advanced Materials reported full-year revenue of £1.03 billion, down 3.3%, due to a £33 million hit from weak semiconductor sales. However, margins held at 9.6%, and management forecasted modest revenue growth of about 1 to 2% for 2026. The company is pushing portfolio simplification and reviewing possible sales, signaling continued restructuring in materials and industrial stocks. To recap, U.S. indexes held ground as global markets reeled from escalating geopolitical risks. The S&P 500 closed just below flat, Dow down 1.6% in futures, and the Nasdaq managed slight gains. Oil and energy stocks remain in focus as the Iran conflict threatens supply routes, sparking sector rotations worldwide. Watch for ongoing volatility as investors closely monitor oil prices, ETF flows, and upcoming jobs data later this week. Be sure to subscribe for more daily market insights and check our website for detailed updates. Thanks for listening. We'll see you tomorrow with the latest numbers and breaking headlines from Wall Street.